Welcome back to Maximizing Your Contractor Revenue via Trip Leasing. This series is developed specifically for independent contractor truck drivers and is presented by Black Cream. This is part 3 of our series, and the purpose of this series is to inspire, provide knowledge, demonstrate how to utilize trip leasing to increase your revenue, and be a guide for implementing trip leasing into your business. Let's get into it. Last session, I left you with a question to reflect on. And that question was, what are some scenarios that you may be able to use trip leasing for the purpose of increasing your revenue? During our break, I hope you had an opportunity to think about some scenarios that you could tap into this tool. The focus of today is to highlight 2 implementation examples of trip leasing. So the first example involves Quality Carriers as the carrier, Black Cream as the contractor, and Cremax as the sublease carrier. And so let me just highlight some of the outcomes of implementing trip leasing. So as a contractor, Black Cream ran 7 loads with Cremax with 5 different freight brokerages that specialize in bulk liquid transport. We were able to secure repeat business with 2 of those freight brokerages and generated approximately 21,576 miles, running about 4,091 miles. The average revenue per mile generated by Cremax was $4.96 versus the $2.68 that Black Cream ran with Quality Carriers. Please note, Cremax incurred additional operational costs, for example, tank washes and the trailer rental. So overall, that first implementation of trip leasing was successful. So then at the beginning of the year, we ran trip leasing again, but this time we did it in partnership with Schneider as the carrier. The contractor we'll call AMD, and Cremax was the sublease carrier. So AMD ran 29 loads with Cremax with 7 different freight brokerages specializing in bulk liquid transport. And that was done between January 16th and March 27th. We were able to secure repeat business with 3 different brokerages, generating approximately $40,231, running 7,898 miles. The average revenue per mile was $7.60 generated by Cremax versus the $2.10 that contractor was generating with Schneider. Cremax incurred additional operational costs of, again, the tank wash and trailer rental. And the contractor was paid 75% of the gross. Once again, this was successful in its implementation. So I just want to go over the key takeaways with those implementing trip leasing in those 2 scenarios and keep in mind, these results were generated with a relatively new MC number that was less than a year old. Actually, when we ran the first loads, the MC number was like 5 months old. But in both cases, it was increased revenue. It was increased revenue per mile. compared to what we were doing being solely leased on to a carrier. We also ran a decreased number of miles, which yielded less wear and tear on our bodies and our equipment. Simultaneously, we were able to create multiple options to generate revenue and repeat business. And this improved our cash flow because we were able to be paid within shorter periods of time. Leased on to a carrier, we were paid every week. However, in doing the trip leasing agreement with the subcarrier Cremax, the brokers would pay within 48 to 72 hours. And we also implemented a factoring company so we could be paid even sooner. So that was within 24 hours. So the contractors definitely appreciated being able to be paid quicker, which improved their cash flow. The takeaway with that, though, is this resulted in having increased responsibilities and ownership. And there was a learning curve with that because we were both leased on to carriers that had a robust network, a robust amount of resources that, you sometimes take for granted. So we had to, again, kind of take on a little bit more responsibility with that, be more proactive in problem solving, so on and so forth. The other thing was that there was definitely deadhead miles in that even though we were striving to book opportunities in advance, sometimes things fell through, which required us to move a little further to be in position for that next load. So that was something that we were towards the end working on fine tuning. And we were able to identify some things, opportunities that required less deadhead miles. And then lastly, I would say the key takeaway in the success was that we had on-time delivery. We got the product there at the time safely. We were able to deliver our product in an efficient manner. And there was good communication with all parties involved, be it the broker, the shipper, and the receiver. In implementing trip leasing, we definitely met our primary objective, which was to maximize our revenue and increase our revenue. If you are currently leased onto a bulk liquid transport carrier and you see yourself generating more revenue, we invite you to complete the power operator screening by scanning the QR code that is here in the slide. Secondly, if you're interested in incorporating trip leasing into your business operations, text MAX1 to 312-285-8090 with a contact name, full name, company name, phone number, email for a preliminary consultation. We want to thank you for your listening ear and investment of time, and we encourage you to subscribe to our channel to be notified of the next video in the series.